Hi, good afternoon. Welcome to the marketplace. Coming up, IMF board set to approve disbursement of $370 million for Ghana after it passes the country on the fourth program review later today. Also coming up, Deloitte pushes for strict expenditure controls and enhanced revenue mobilization to sustain Cedi's sustainability. My name is Darryl Kwal. Thanks for being with us. Details coming up. And first up, the IMF board is expected to approve approximately $370 million in funding for Ghana following the completion of the country's fourth program review later today. In Washington, D.C., George Affe has more on this story.
The IMF board is set to meet today and review how the country has performed when it comes to meeting those targets set under the fund program for the second half of last year. Joy Business understands that the country has met all those critical targets. Therefore, the board will pass Ghana on the fourth review and approve the disbursement of some $370 million to the country. That should hit the Bank of Ghana's account before the close of this week. Ghana is also expected to get some $360 million from the World Bank. That should also come in before the close of this month. All these inflows may go a long way to improve the Bank of Ghana's international reserves, a move that should help in the city's stability against all the major trading currencies in the coming weeks.
Next, to sustain the recent appreciation of the cedi and ensure it translates into long-term economic stability, audit and advisory firm Deloitte is urging the government to enforce strict expenditure controls and strengthen its revenue mobilization efforts. This was captured in its latest report, Unpacking the Cedi's Resurgence. Dennis Brown is an associate director at Deloitte Ghana. He joins me on Zoom. Good afternoon to you, Dennis. So while the Ghana cedi has appreciated significantly in 2025, do you believe these gains are sustainable over the medium term, especially considering the fiscal pressures in 2026, based on your analysis? And what key indicators should we monitor to assess the ongoing currency stability?
All right. Good afternoon, Daryl. Good afternoon to you and your viewers, as well as your listeners. And yes, as you've indicated, we've seen appreciation of the cedi over the last few months. And so what we try to do in our article is to unpack what the causative factors are, and then to also look forward as to how we can sustain that going into the future. Yes, if you ask me whether that is sustainable into the future, of course it is, but it depends on what we do from here on, the very actions we take to sustain that. I mean, if we get it right, of course, it will sustain it into the future. If we don't, we are going to weaken our position. As to the indicators that we need to monitor, as indicated in our article, there are a few things that have, accounted for this stronger position, one of which has to do with favorable external developments. So this little war between US and China, and then some other countries, generally the trade war that the US has been on has weakened the US dollar, and therefore there's a mirror effect in terms of how the US dollar has fared with other trading currencies, and Ghana, is not excluded. So therefore, we need to monitor external developments. Typically, we do not have control over external developments, and so we just have to monitor to ensure that what we do locally to strengthen the cedi, goes to counter whatever negative effects that will have from there. Secondly, we should also look at our FX reserves. We know that it's been building up. The new government, since taking over, has built up from where the old government left off at around 8 billion. The last update we have shows that it's around 10.6 billion, which is quite impressive. And that also is also being anchored by the gold reserve. So the gold board is doing some good work in terms of, accumulating the gold reserves, which is also anchoring the value of the cedi. So that's also another indicator that we need to monitor. We also need to monitor inflation, because when inflation goes up, the value of the cedi, as communicated to international investors, is that it's not a good store of value. So they would move to other assets that are held in other currencies like the USD, and then the depreciation pressures will set in again. We also need to monitor the external environment for the commodity prices, the global commodity prices, because we've seen that over the last few months, gold prices have gone up, cocoa prices have gone up. All of that, have helped in boosting our FX reserves through the earnings that we made from those exports. I mean, the opposite can happen, and it can drag us into another, period of depreciation. So that's also another angle, or those are also some other money indicators that we need to monitor to ensure we keep things at bay.
Yeah, I want us to talk about the alignment between the fiscal consolidation efforts and the Bank of Ghana's monetary tightening, how critical that is in restoring investor confidence, and what risks you foresee if this policy coordination weakens.
Yeah, that's actually a brilliant question. So, I mean, if we roll it back to the one of the first updates that the new Bank of Ghana governor, gave, he highlighted the fact that they've ensured that there's better coordination between, the Bank of Ghana and the Ministry of Finance, which is the major supervisory body over fiscal, policy implementation. And that tells you how critical that coordination is for, strengthening our position. Indeed, it came up during the economic forum earlier on in the year. It was highlighted as one of the areas that we need to look at to ensure that monetary policy and fiscal policies are not being, pursued on silo basis. Because when you do that, there might be well-intended policies on the fiscal side that might present risks to the monetary side, and vice versa. So clearly, what we've seen over the last few months, and as also confirmed by the Bank of Ghana governor, there's been a lot more coordination between the Ministry of Finance and the Bank of Ghana over the fiscal and monetary policies, so that we've seen the fruits thereof, right? Just to give an instance, there was an instance earlier in the year where the Ministry of Finance had, limited its subscription to T-bills, and that then sought to, that the effect of that was that T-bills rate reduced, and when T-bills rate reduced, the international investors, picked that signal as the cedi not, being worth less than it used to be, and so the attraction would be to move to other currencies like the USD, and that had some depreciation pressures around that time. But Bank of Ghana stepped in with this liquidity support and made sure that did not spiral into something far more, dangerous. And so clearly, the coordination between the two is very, very important. If we were to weaken that going forward, I think I've already stated the effects. You could have an instance where Bank of Ghana is just pursuing a free fall of the cedi and being overly excited about it. That could reduce our export competitiveness, for instance. So there are companies here that are driving exports. They are not so much interested in getting the cedi to just free fall like that, because in between time, there's a lag period between when they invest and when they realize, the fruits of their investment. And so if you're not careful, they'll be making losses if in between time the cedi is falling that far. So if you heard President Mahama a while ago, he talked about a government together with Bank of Ghana projecting that the cedi will rest somewhere around between 10 to 12, right? Also because of the need to maintain export competitiveness, so that your exports does not become overly expensive when you are competing with the likes of Ivory Coast and other countries within the region when facing the international market. So it's very important, in terms of the coordination, for us not to weaken it, to rather strengthen it going forward.
Yeah, we started this bulletin by reporting on the IMF Programme fourth review, which we expect to pass, and then hopefully there'll be the disbursement of some $370 million to Ghana. Beyond the disbursement and debt relief under the IMF program, how do you assess the government's progress in implementing structural reforms?
Yeah, I mean, so when we talk about structural reforms, right, a government that is 6 months old, one would, reasonably say that it is too early to assess the effectiveness of their policies in terms of, structural reforms, right? Structural reforms by nature takes much longer to, yield fruits. But I think the major flagship program that we've seen launched, which is the 24-hour, economy, 24-hour economic program, is what the government is seeking to, drive over the next few years, and hoping that transforms our economy and really, tells the story when it comes to the structural reforms that we want to pursue. So it's early days yet, but at least within the first few months, we've seen government take some of the most vital steps, including putting the program together. I have seen it. It's quite comprehensive, and the distinctive feature for me is how it integrates measures. It integrates measures across various components, as compared to previous policies that were implemented in silos across various sectors. Also, we've seen government indicate clear commitment to, pursuing this policy, and we can only hope that the private sector also comes on board. So when it comes to structural reforms, it's about the flagship policy, the flagship program, 24-hour economy and export drive. But of course, that is just too early. It was launched a while ago. We can only hope that in the coming months, the
Yeah.
government, shows unflinching and unwavering commitment, not by way of just actions, but also resource allocation in the subsequent budgets that will come on, right? That then will tend to attract private sector investors because they see that government has a skin in there, and government will do what it takes to, protect itself, and therefore it's worth, going into such partnership. Yeah.
My final question would be, given the improved macroeconomic performance outlook and the city's performance, what policy reforms you would recommend for the government? Plus, I mean, there's all this talk about value addition and, sort of adding more value to our raw materials going forward, so we become diversified in terms of exports.
Yeah, so in terms of diversifying our economy, that's also highly linked to the flagship policy, which is the 24-hour program. Like I did indicate, this covers various components. I think there are about 8 blocks. It's really, really comprehensive, and it's been planned to be implemented in an integrated manner. At the end of the day, if we are able to do that, if we are able to roll it out as planned, we are going to see an economy that is completely transformed, that is well diversified as well. That's also focused on improving our manufacturing, capacity, adding value to the primary products that we normally, export. And so it's all nestles in there. It's one big policy that can have other policies joining in. And the idea for us is to get government to commit so that private sector can come on board and help drive, the various measures, policy measures indicated in the program. Yeah.
All right. Thank you so much, Dennis Brown, Associate Director, Strategy and Transactions at Deloitte Ghana. I appreciate your time with us on The Marketplace. You're watching The Marketplace on Joy News. We're taking a short break. We will be right back with your financial market updates. Welcome back to the marketplace. Time for your financial market updates. Government failed to meet its treasury bills target for the 6th consecutive week. According to auction results by the Bank of Ghana, the government missed the target by 11.5%. Meanwhile, interest rates continue to decline, but marginally on the yield curve. Joining me on Zoom, research analyst with Data Bank Research, Mark Jordan Sikanate. Good afternoon to you, Mark Jordan. The government has missed its T-bills target for 6 consecutive weeks despite falling interest rates. Tell us about that and what it suggests about investor confidence in the short-term government securities.
Good afternoon, Daryl, and thanks for, thanks to your viewers. Yes, so like you mentioned, for the past 6 weeks, we've seen government and T-bills auction undersubscribed. And I think last week, government was looking up to raise some 3.36 billion, but they ended up raising 2.96 billion. And like you mentioned, that's about close to 12% under subscription. In terms of what this really means for investor confidence, I think largely when you look at the amount of bids coming through, and you could see some confidence still in this short-term securities, which is the treasury bill. So in terms of confidence, I would say it is there. What we are currently seeing from investors is actually a conscious play in terms of, gauging the juicy part of the market to see the various securities which really return them the maximum return. And that's why we are seeing this under subscription in T-bills, because if you see year to date, thus far how it decline in terms of interest rates on the treasury bill side, you can tell that as an investor, you start looking for other juicy alternatives. And then, to the best of our knowledge and what we have so far, looking at the market and trying to understand where these funds are flowing through, you could really, when you look from BOG's OMO bill, consistently over, I think, the past 3 auctions, they've been able to raise over 8 billion. And when you check the dynamics in these auctions, they've consistently raised above 4 billion. So clearly, you see where these funds are going through. And in terms of this even OMO bills, you can see clearly it's coming from the commercial banks, and where these commercial banks are getting this funds from, clearly it's from these investors. So, and that's the play, because the yields on these other fixed income securities at the moment are juicier than what we are seeing on T-bills, because if you see OMO bill, a 56 OMO bill around close to the 28% yield. I mean, as a rational investor, you see how best you can make some ample return from that security as well. So that's the play we are seeing in terms of the confidence.
We're seeing a marginal decline in interest rates on the yield curve. Talk to us about what your outlook is in the short to medium term and how this might influence government borrowing, cost of borrowing going forward.
Yes, I think clearly when you watch the near-term impact, it brings down government cost of borrowing, because if you were initially issuing in the high 20s, close to the 30% region, expected to pay high interest rates on those amounts, you currently are in the mid-teens, and clearly you'll be paying quite lesser than what you were doing initially. So in terms of government borrowing cost, and the impact is a positive one, because they now have to pay less in terms of interest rates.
All right.
Interest on these funds. However, I think the long-term impact is that it now pushes the government into the realms where they can tap funds from the longer end of the market. Like I think the finance minister alluded to some weeks ago, and the Treasury's intention to tap funds from the longer end of the curve by Q4 this year. So largely, this what it means for government cost of borrowing in the near and long term. Yeah.
Let's switch to the stock market. We've got our eyes on MTN Ghana shares. We expect it to exceed the market price. What's driving investor demands? Tell us about that. And would this momentum be sustained?
Yes, I think we expect the MTN is on our radar for this weekend. We expect the stock price to increase. And like you mentioned, we are currently seeing bid price above current market price. And we believe this momentum could be sustained. In fact, we are looking at a near-term 12-month target of 4 cedis 95 pesos for this security. Yes. And we believe it's sustainable given the stock's fundamental, high data consumption in the Ghanaian market. We are going digital as an economy, and then MTN is just that number one player in the telco. I mean, has really attained that level in the telco space, and we believe they will continue to reap benefits from that end. Also look at the mobile money ecosystem and the like. So fundamentally, it presents a good buy option to investors. So they should sustain it. And however, when you look into the technicals and the near term of the market, it tends to pay interim dividend a lot. And given that we've ended the first half of the year and our expectation of a positive performance and earnings for the firm, we are currently seeing like build up on the stock by investors. Yeah.
All right, Mark Jordan, thank you so much. I appreciate your time with us here on the Marketplace. You're watching the Marketplace on Joy News. Managing Director of KK Insurance Brokers and Shaibu Ali has pledged to expand the company's footprints in Africa in the short to medium term. According to Ali, the move is expected to replicate KEK's excellent service across the continent and ease insurance operations of its clients operating across borders. Here's more from the 35th anniversary Thanksgiving service of KK Insurance Brokers.
Than 5 employees in a small office in Accra. Currently the leading insurance brokerage firm in Ghana, KK has over 6 offices dotted across the country, with operations in Côte d'Ivoire, Sierra Leone, and Liberia. Speaking to Joy Business at the Thanksgiving service to mark the anniversary, Shaibu Ali, Managing Director, highlighted KK's quest to expand its footprint in Africa.
For us, we think that if you take Ghana, we have seen it all. Everything that we can achieve in Ghana, we have done. Our growth trajectory lies outside of Ghana. So now we are looking forward to setting up of a network of insurance brokers. That is why we are dotting up in these countries. And hopefully we hope to cover the whole of Africa in about the next 10, 15 years. It's not going to be easy, but we have the determination to do it, and God willing, we will do it. That way, we get to service our clients across board.
On the occasion of its anniversary, KK Insurance Brokers decided to support the building of the Child Cancer Unit at the Kolebu Teaching Hospital, which is spearheaded by the NGO Lifeline for Childhood Cancer Ghana.
Our mandate is to support girl-child education. And so every year, 1% of our profit is set aside for that purpose. But this year, because it's our anniversary year, we sort of want to do something different by supporting the Child Cancer Unit. And we want to be able to support them to complete the building that they are putting up at Kolebu to see how that can help alleviate the problems of the kids. So both the company and then the staff have taken it upon ourselves to help contribute toward that.
In an exhortation, Bishop Asante Mafo Ahinkra urged KK Insurance Brokers to strive for greatness.
So Paul is teaching us to have a certain attitude towards running. And so I have just a few points that I've written here. Number one is that Paul was not satisfied with his past achievements. And I want to encourage KEK, don't be satisfied with your past achievements. If you get too satisfied, you will slow down and then you'll be content. And that is the way to fail.
The Thanksgiving service gathered industry players and staff from all of KK's outlets. The 35th anniversary also commemorated the 15th anniversary of the passing of its founder, Kwesi Esel Kumsin.
All right, and that's the Marketplace. Thanks for watching. Yeah, I was working some math alongside this, so just so you know, myjoyonline.com/business. IMF board considering a review of Ghana's program. We are awaiting word on it. Also, IMF appoints Dr. Adrian Alta's new resident representative to Ghana. myjoyonline.com/business. Thanks for watching.